Prime Minister Starmer declares the UK is back on the world stage, but does his economy match? The UK sealed a long-sought trade deal with India on Thursday, the biggest struck since Brexit. The pact will cut most of India's tariff lines for the UK, helping exports from whiskies to cars. Meanwhile, President Trump arrives in Scotland, where Prime Minister Starmer will lobby to accelerate a final deal to cut tariffs on British steel. So, will Starmer's trade deal euphoria be felt in UK households? Anna Macdonald is investment manager at Aubrey Capital Management. Anna, British car makers have been left underwhelmed by the India-UK trade deal. Is there much cause for celebration?
I think the reason for the underwhelm is that it's taking a long time to get to those lower tariff rates. The mid-market is still going to be subject to quite severe tariffs of about 50%. Now, that's to protect India's own burgeoning car industry. And I think there's also disappointment on the quotas that are going to be allowed. So actually, there aren't that many cars that are going to be able to be imported into India at the lower tariff rates, even for high-end vehicles. And that's particularly going to be for petrol and diesel vehicles. So I think that's the reason for the underwhelm. There's an enormous opportunity out there in India. We've got about 27 cars per 1,000 people in India. Compare that to the UK, where we've got 550. And so we've got a lot of excitement about a growing middle class in India wanting to import.
Meanwhile, UK households are saving the most since the 2007 credit crunch. Are stormy conditions ahead for the UK economy?
The mood music hasn't been great. We've seen tax rises since April, and we're worried. I think consumers are worried, households are worried about potential tax rises come the autumn, because we know that Rachel Reeves is determined to stick to fiscal rules, and it's looking like that in order to stick to them, we are going to have to raise tax revenues. So I think households are being preemptive in terms of how they're thinking about this, and they're saving for that.
UK retail sales barely grew in the second quarter. How is the Bank of England reading all this?
So I think that the Bank of England is going to be looking at that more than the inflation picture at the moment. Inflation does remain above target, but I think the Bank of England is going to be concerned about faltering economic growth. We had a good first quarter, 0.7% increase in GDP, but the second quarter has looked to slow down quite a lot. So maybe just a little bit positive GDP growth, maybe just 0.1 or 0.2%. We wait to get those official figures, but I think that the market is now pricing in a 25 basis point cut at the next meeting, which is in a couple of weeks' time. And the market's also pricing in a further cut later this year.
Finally, Anna, let's look at the Footsie. It's pushed to record highs this week on trade deal optimism. Should we expect stocks to continue to race higher?
I think there is quite a lot of optimism out there. What we'll see over the summer, sort of quieter trading, we don't really know. There's a little bit signs, I think, maybe of too much euphoria. We're seeing meme stocks coming back in the picture, a lot of enthusiasm about crypto. Even SPACs are rearing their head and causing a lot of excitement. And that tends to be, it can be seen as that happens at the sort of bubbly end of the market. But there are some fundamental reasons for the Footsie to do well. It's a much cheaper market than the US, for example. It's trading on maybe 13.5 times, and it has a pretty good dividend yield. So it's seen, I think, as a good way to play some fairly solid recovery stocks, the banks, the defence stocks, materials, energy companies, and so on.
That was Anna Macdonald from Aubrey Capital Management. Don't forget, you can watch more videos on Reuters.com.